When interest rates start to fall and gold prices begin to climb, most people just think, nice, borrowing is cheaper, and gold investors are happy. But behind that combination hides a story that has repeated through history, a story that sometimes ends with a financial storm. Today, let's break it down simply. Why do falling interest rates often lead to rising gold prices? And why could that signal that another financial crisis is quietly building in the background? Part 1. When interest rates fall. Interest rates are like the heartbeat of the economy. When they're high, money becomes expensive. People save more, borrow less, and growth slows down. When they're low, money becomes cheap. People spend, borrow, and invest. So when central banks like the U.S. Federal Reserve start to cut rates, it usually means they see something weakening in the economy. Maybe unemployment is climbing, maybe businesses are slowing, maybe inflation is cooling too fast. Rate cuts are meant to stimulate activity, to push more money back into the system. But here's the problem. If the economy were truly strong, why would rates need to fall? That's the question smart investors always ask first. Part 2. Why gold rises. Gold has no dividends, no interest, and it doesn't produce anything. So why does it become more valuable when rates go down? Because gold represents trust, or the lack of it. When people stop trusting paper money, they run to gold. If interest rates fall, the value of cash savings decreases. At the same time, inflation may still linger, meaning your dollars lose purchasing power while sitting in the bank. Gold, on the other hand, holds its value. Throughout history, from the 1970s oil shock, the 2008 crisis, to 2020 during COVID, every time central banks printed money or slashed rates, gold prices soared. It's not magic, it's simply human behavior. When people feel uncertain, they buy security, and gold feels safe. Part 3. The hidden warning behind this pattern. So when we see rates going down and gold going up, it tells us one thing: confidence is slipping. Investors believe central banks are preparing for trouble. Maybe a recession, maybe another debt bubble. Governments are taking on massive loans again. Global debt is at record levels. If borrowing costs stay high, many countries can't even pay the interest. So they need lower rates to survive, but that cheap money can create the next bubble. It's like giving painkillers to a patient instead of treating the real illness. The economy feels better for a while, but the problem inside keeps growing. Meanwhile, people look at gold's rise and think, wow, investors are optimistic. But no, rising gold often means investors are scared. They don't trust banks, stocks, or paper assets. They're looking for a lifeboat. Part 4. What history teaches us. Look back. In 2001, after the dot-com crash, the Fed slashed rates. Gold doubled in the next few years. In 2008, rates dropped to near zero. Gold reached record highs. In 2020, after the pandemic stimulus, gold hit $2,000 an ounce. Every time rate cuts came first, gold rallies followed, and then came a financial shakeup. History doesn't always repeat exactly, but it often rhymes. Part 5. What it means for us now. Today, we see central banks slowly signaling that the rate hike era is ending. Inflation is easing, yes, but debt levels are enormous, from governments to credit card users. And quietly, gold is rising again. It doesn't mean a crash will happen tomorrow, but it does mean smart investors are preparing, diversifying, holding cash, owning real assets, and watching central bank moves closely. Because when rates fall and gold rises together, it's not just a chart pattern. It's a message. Money is getting cheaper, but trust is getting weaker. Conclusion: the calm before the storm. Maybe nothing happens. Maybe the economy soft lands and everyone celebrates. But maybe, like before every crisis, the warning signs are already here, just quiet enough for most people to ignore. And that's what separates an average investor from a prepared one. So next time you hear that interest rates are dropping and gold is rising, don't just smile and move on. Ask yourself, what are central banks afraid of? And what are investors trying to protect? Because markets move on numbers, but wealth is protected by awareness. Stay curious, stay disciplined, and always remember, when everyone feels safe, that's usually when the storm begins to form.